Welcome back to the Trading Desk. We're going to spend this segment talking about the smart money. These guys are the smartest, most successful investors in the world, the all-stars of finance, as we like to call them. When they talk, we listen. Matt, who are you listening to these days?
Let me say, as a former hedge fund manager, I like to look at who the smartest money out there on the street on the hedge fund side. The two guys I consider to be some of the smartest guys as far as equities are concerned are one, Stevie Cohen with SAC Capital Advisors, based out of Greenwich, and then you've got Eddie Lampert, who most people may have heard of. He also happens to be the largest shareholder of Sears and also AutoNation, a couple large retail institutions. Both of these guys manage large money, and Stevie Cohen, I'm talking about $14-15 billion. He also happens to be the largest private collector of art in the world. He's got the largest personal collection of Picassos, more than any museum. The guy is loaded.
And, kind of successful.
And he's made he's basically consistently 25%, basically year in, year out. He hires the best traders. I like to know what he's doing, if for nothing else. But if you want to mimic a hedge fund, this is a great way to do it. Find out, go to Yahoo Finance, find out what these guys own. This stuff is public information. Anybody can find this stuff.
Right.
Eddie Lampert, same thing. His company's called ESL Investments. These guys are smart money. You can see what they're doing, see where they... Anytime a hedge fund or any institution owns 5% of a company, it's publicly filed. Right. So it has to be filed immediately as soon as they take that position. So there's really no leg up for them to do that. They have to disclose that, and that's usually a longer-term position for them. Right. The other thing about these guys is they are smart, they're savvy. Eddie Lampert was taken custody and kidnapped 2 years ago, and he was held ransom for $1 million. Right. He negotiated down to $40,000, paid the guys, and he's free. So those are the guys I like. Any guy that can first of all, if you're stupid enough to kidnap a guy for $1 million when he's worth billions, you're
probably going to get loose anyways.
Right. Dave, who do you like?
I had somebody else in mind when I came in here today. I was going to talk about a guy in the Forex industry who's just phenomenal. But I think in light of the macro developments in the last week, Bill Gross from PIMCO Investments, the largest bond fund manager in the world. But what I like about Bill Gross is that he goes beyond just talking about bonds. He's a really, really good macro thinker. And what I like about him recently, and the good thing about Bill is he does a monthly podcast and he writes a monthly newsletter at pimco.com, and it's free. But he's been talking about the subprime crisis. I mean, a lot of people have been talking about subprime, but he was one of the few guys to say, you know what, this thing is not contained. The market's in trouble. You're going to be looking at mortgage defaults. And he said this.
He's got his finger on the pulse of the fixed income market. He knows probably better than anybody what's going on.
And I think if you listen to him, you're going to...
$60 billion.
Yeah, $60 billion under management. If you listen to a guy like him, you're going to get a viewpoint you're not going to get in the press on a day-to-day basis. And I think it's usually the viewpoint that probably is a little bit more, has more clarity to it.
He's also got one of the largest, wealthiest stamp collections, I think, in the world.
He's a stamp collector, and he kind of lampoons himself on that, too. Right. Yeah.
Jesse,
I like a hedge fund guy to stay with hedge funds. A little bit old school, though, compared to your guys. But instead of 20% rates of return, he was putting up 40. So,
tougher times.
Little bit better. Jimmy Rogers is the guy I'm talking about. He helped found the Quantum Fund with George Soros, ran it, like I said, 40% per year, 3,000%, over 3,000% over 10 years.
Cumulative.
Right.
Yeah.
And the guy has just, had all kinds of savvy calls over the last few years, whether it be real estate or whatnot. Lately, it's been interesting. He's been talking about real estate and the big investment banks, saying that we've had one of the largest bubbles we've ever experienced in history. And these types of things don't work themselves out in a couple of months.
He was also getting long commodities in 2001 when nobody was even
talking
about them.
Great call, buying commodities.
And if you bought the commodities index in 2001, it's up 600% in those 5 or 6 years.
And people snickered at him on the news when he was talking about that. And
might have been his bow tie, I don't know.
It could have been the bow tie. The guy knows his stuff.
He's a brilliant guy, and he's saying caution is warranted right now, basically across all asset classes. So
he's early, often.
He's usually early, and he's usually short
right.
the home builders and those types of things. So, well, that's about all the time we have for this segment. When we come back, we're going down to talk to everyday people down on Wall Street, not New York, downtown Bend. Stay tuned.
If we gave you $100,000 today, where would you invest it over the next year?
In Bend, Oregon.
In what relation would you buy?
Real estate.
Real estate?